Hey there, everyone. It's Mitch Goldberg. You are just getting started with me. We are at Be the Boss of Your Money, and we're live. Thank you so much for joining me. My name is Mitch Goldberg. As you know, this is Be the Boss of Your Money, my live stream. I run this show every day, Monday through Thursday at 4:30. I am so grateful that you took some time out of your day to join me. It means a lot to me. Today's updates have a bunch of things involved. We're going to follow up with meme stocks, undervalued stocks. I want to share with you a couple of stocks that are still value, still economically sensitive reopening stocks, but I think it still have a long way to go because everything you look at is $100 or more a share. Deere and Company, Caterpillar, Boeing. Can't we find a stock, for crying out loud, that's like not just under 100, not just under 50, but maybe even under $20 a share? Well, let's take a look at some companies whose stocks happen to be in that price range. And I also want to follow up on a couple of things. I got a shout out from somebody today on LinkedIn and a very important question from another friend on LinkedIn about inflation. So we're going to get into all of these things. While you're watching this, if you have any questions, words of wisdom, words of encouragement, they're always appreciated here. I love hearing from you. It's my favorite part of doing this. Same thing goes for you if you're watching this in the live stream. Hit me up with your questions as if you're watching this in the live stream. While you're watching it in the replay, and I cannot wait to see your questions and give you the answers that you need. All right, so here we go. Let's roll the quick intro. This is going to be a good show. It's going to be jam-packed, and we're going to keep a fast pace. Here we go. All right, we're back. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. It's a live stream I put together every Monday through Thursday at 4:30 to really, literally, I mean it, so you could be the boss of your money. We all know how easy it is to become a slave to our money. We know how easy it is to, when our money becomes the boss of us, when we lose control, and we're like, how did we get to this place? And sometimes we need a little reminder. Sometimes we need a little kick in the ass to get back in gear. And that's what I'm here for. And if you're, by the way, one of my colleagues, a financial advisor, I see you, Nick and Dave. Thank you so much. I'm going to get to your comments in a moment. I really appreciate all of you taking the time for this. I am humbled. We've got a couple things to talk about. Undervalued stocks, catch up just to the general market overall. Quiet day today, no disasters. Meme stocks. We're talking about meme stocks a lot. My entire live stream yesterday was dedicated to meme stocks. Let's see if I still have the thumbnail here. Yeah, this was my thumbnail from yesterday. Meme stock FOMO, should you buy now? We went through a whole litany of things or activities and goals that I think you would need in order to get to the point where you could take a shot on something so speculative like meme stocks and crypto for that matter. And yes, I realize there are some people who are making a boatload of money on AMC, some people who are friends of mine who are really talking it up on Facebook there. You better be careful because a lot of your friends and relatives are going to start asking you for loans because you're bragging about making so much money on AMC on Facebook. But nonetheless, let's take a quick look at today's action. I want to thank a few people for joining me. Thank you so much, Nick. Good afternoon, my friend. And yes, good afternoon to you as well, sir. And Dave Boniface is over here, a very smart fellow, great person to follow on LinkedIn. Great insights always from you, Dave. And thank you very much, guys, for joining me. If you have any questions, let me know. And by the way, guys, Nick and Dave, if you want to jump on the screen here with me and jump into the live stream, let me know. I'll send you the link through a DM on LinkedIn, and we'll give it a shot. Come on in, if you dare. Okay, if you don't want to, and it's kind of last minute, I get that too. But your insights are valuable, and I'd love to share them with everyone. So let's just take a quick rundown the market. Okay, we're going to do a share screen. I'm going to make the screen nice and big so you could see it better. 200%. do a share screen, pop myself up in the corner. I'm right over here. You see me over here. If you want to know how I do this magic with like the share screen and popping myself up over here and transitions and, multi cameras, or how I could just go like to another camera like that. And then I go back to camera one, and then I go back to share screen and put myself up in the corner there. Boom. You let me know. I'd love to share the knowledge with you. The Dow today off 23 points. No big deal. A couple of stocks are off, but really it's not even something that gets my attention. It was just basically a flat day for the Dow after a decent, an okay day yesterday. It was very flat yesterday too. Last week's live stream, last Wednesday, Thursday, I talked all about how boring, how allergies. I talked about how boring the market's gotten quiet. NASDAQ is off. I mean, this gets my attention. NASDAQ down 141 points. Tech stocks took a hit. The reopening stocks are what held up the Dow from being down anymore. S&P off a bit. Again, tech stocks, FANG stocks down. Gold backing off a little bit. We're always talking about inflation. And I know everybody's talking about inflation and prices rising, and I see a lot of the posts. They're kind of scary. The price of everything is going through the roof. The Fed's going to have to move and raise rates sooner than they said. I don't have a crystal ball, but what we talked about yesterday and the whole, well, was it yesterday? I do so many live streams, I'm losing touch. All right. What was it yesterday? Meme stocks. But a few days ago, we talked about inflation. And what I said to you, and I'm going to throw in a shout out to somebody in a moment about this. What I said is inflation, I think it's transitory. The Fed says that, obviously, and they believe that. We have to take the semiconductor chip shortage. That's a supply issue that'll be resolved. I already see lumber coming off pretty heavy off its blow off peak. If that was a peak, it was a blow off peak because it's like parabolic, kind of like a meme stock, and then it comes down like that, and you just chop the whole top of the triangle off, and that's where we are on lumber. Okay, so let's go on. The shout out I want to say first and foremost, let me just pop myself up in the corner here again, is to a lot of people watching this already know this person. His name is Eric Boyum. He's a financial advisor, and thank you so much. And Eric said this about a post I shared about inflation. This is a snippet from my video 2 days ago about inflation. And what he said is sharing great content. Mitchell Goldberg, hey, that's me, is right on the money. The number one topic I am asked about right now is inflation. Mitchell explains it very well. If you are active on LinkedIn, go follow Eric Boyum. He puts out just such good common sense. I think in his own personal, hard-hitting way. He doesn't mince words, and I appreciate that. And thank you for the shout out. And if you haven't seen my snippet on LinkedIn, Facebook, or YouTube, I posted it all over the place today. So please take a look at that. Second one is I want to get back to my friend Dylan Pollock. Dylan is a financial coach with I think it's Rad Coaching or Rad Financial Coaching. Okay, him and his partner Rebecca. Rebecca has actually been a guest on my live stream a couple of times, and she's terrific. And her husband Dylan is terrific. And Dylan saw my post today about inflation on LinkedIn, and he asked, I was listening to the Planet Money podcast months back, and they were talking about how we can create inflation by our consumer behavior. When people are concerned, prices will go up in the future. They tend to buy more than they need, which puts pressure on the supply chain and causes inflation. They cited some examples, cars maybe in the 90s. Well, here's the thing. And my answer was this. It's true. This is and just pay attention to this. I know my share screen is not the most exciting thing, but just pay attention because I think the education is important. It's true. This is exactly what it means when the Federal Reserve says whether or not inflation concerns have become grounded. Okay. So that's the word with the Federal Reserve. It means grounded. So let me just switch to camera 2 here. I feel so cool when I do this. What the Fed means is this. If consumers think inflation is just short term, prices are up now and they'll probably come right back down. That's okay. But if consumers think price increases are sticky and they're going to keep going up and up and up, what consumers will do is they'll start hoarding goods. They'll start buying more than they need. So they'll stock up because they don't want to get stuck paying more for the goods they need down the road, because they want to avoid the pain of higher prices down the road. But that in and of itself causes prices to go up even more and put strains on the supply chain. Very similar to what happened with toilet paper when the pandemic started. Okay. And it works in reverse. When people see prices of things going down and down and down, people put off making purchases because they believe that if they wait, they'll get better prices on things. And then they stop hoarding and they slow down their purchases. And that creates deflation, which is something that the Federal Reserve has been worried about for the last, 11, 12 years or so. Okay. So that's why the Fed now says we think inflation is transitory. And we could go on from there and debate whether or not they're right. Right now, I'm in the transitory camp with inflation, but it doesn't mean that I don't have reopening stocks and chemical companies and energy companies in my client portfolio. So I am benefiting greatly from the economically sensitive stocks for my clients. I'm very happy about it. But I always say in the show, have both. Don't just go into reopening stocks or work from home stocks. You have both. You diversify, right? Diversification is a process that we use to reduce risk, but it won't necessarily protect your portfolio from going down in a generally down market. You see how I get that in? I am so good at getting that disclaimer in there. It's just like, it's crazy. So let's do a little more screen share. And I see some beeps up there. Yes, Dave, first time listener, man. I really appreciate you being here. Putting you up there twice, okay? The Gold Mine had an incredible thought-provoking podcast about the Great Reset. You know what, Nick? I actually saw you post something about that. So now I have to go take a look. You've more than piqued my curiosity. I'm definitely taking a look. And what else? Is there a magnifying glass too close to the page, i.e. looking at 1 year versus 10 year or 20 year? Oh, absolutely, Nick. Absolutely. I mean, if people weren't, if people weren't concerned about this short-term stuff and the ups and downs of the market, the vagaries of the economy and central bank policy and tax policy and all these other things, we wouldn't have anything to talk about, right? But people are emotional. They do react, and they get carried away. Nick, I'll tell you this. I have a couple of clients who are going to retire early. They're going to retire now, when we were thinking that their retirement time would be maybe in another 3 to 5 years, maybe 6 years for some of them. And they're retiring now. And why is that? They're employed. They were never laid off during the pandemic period. Things are going good. You know why? Because their stock portfolios are up so much. And they're thinking, well, what I would have worked for the next 4 or 5 years, I have now. We're further ahead in our plan because the stock market went up. My concern is that you're making this plan based on a rising stock market. What if the market goes back down? And then we have to obviously change and maybe move more money into cash equivalents, low duration bond funds, that sort of thing, to protect the money. We don't want to worry about that negative sequence of returns. But, then you have to change the equation, because now you're making the financial plan, let's say 30 years in retirement to 35 or 36 years in retirement. And that's more time spending. It's more time compounding, but it's more time fighting inflation. So I'm seeing a lot of changes in the dynamic. And I have a bunch of clients who are all of a sudden thinking, why don't I just get out of the rat race now? And you never know when you're going to, so that's the international sign language for kick the bucket. Okay. Or no, it's really like something like that. Okay. You like the sound effects that I put in here? So let's take a look at some of the crypto. Let's pop back up into the share screen. Good day for crypto. Bitcoin pushing 40,000. Ethereum not too far from getting back to 3,000. Litecoin up a little bit. Where's the Doge? I call Doge the Doge. I don't know why, but Doge 39 cents, because it is a joke. That's right. It was started as a joke. And just because somebody thinks it has, look, if enough people think something has value, then it has value. I don't know if there's really enough room for all of the cryptos. And the crazy thing is, the crypto that really springboards us to a true cryptocurrency, a true crypto land, it probably wasn't even invented by now. It's just my thinking. It's kind of like people who bought, AOL as the best and Yahoo as the best internet stocks you could have. And those were the best internet stocks in the late 90s and early 2000. Google and Facebook weren't invented yet. Right now, there are two internets. There's the Google internet and there's the Facebook internet, if you think of it that way. So it's a very good chance that we haven't even seen the true, crypto yet. Okay, let's take a look at some of the meme stocks. Nice white screen there. Okay, so AMC was at like 61, 62 bucks, popped in early trading. They went down when the company said they're doing a secondary stock offering. Then they said they cleared up the secondary stock offering. It's all done. And then everybody's going, oh, like, great. It was absorbed into the market. The stock went up. By the end of the day, it went down 11. It's down about 18% in regular trading, down another almost 10% after market trading. And I think what happens in a case like this, what could happen, a lot of people say, you know what, maybe I need to protect my profits and beat everybody else to the sell button and get out of it now. And it's kind of like crowding a herd of elephants through a narrow doorway when everybody tries to get out at once. And that's why stocks gap down, kind of like it gapped up. Okay. And we could look at some of the others. Let's look at Bed Bath & Beyond. Bed Bath & Beyond used to be called Bloodbath & Beyond because it was such a poorly performing stock. But this stock lost almost a third of its value today. Yeah, it was up a lot yesterday and giving it back today. This is what I mean by playing with fire. This is just trading stuff. It's funny money. Enjoy it. I have no kick against you, by the way, if you're playing with this stuff. If you've met, you have an emergency fund, you already have your solid investments, you're contributing to your retirement plan, and you want to gamble a little bit and have fun, go right ahead. I swear I have nothing against it. Okay. So, and thank you, Dave. That is very insightful. Thank you for the for that. Thank you. Making sure my mic is in the right place. Thank you very much. Thank you so much, Dave. And hey, do you remember, Dave? I put out that poll. I put out a poll. I do remember. I put out a poll. Would you buy a crypto, a Bitcoin? I said, would you buy a Bitcoin ETF? And a lot of the responses were really smart. People were like, why would I buy an ETF with one investment in it, like just crypto? In that case, you might as well just buy, why would you buy an ETF with just Bitcoin? You might as well buy Bitcoin. And the no votes were like 51%. The yes votes were like 49%. Would you buy a Bitcoin ETF? And my point being that, it's just a way to get exposure to crypto without having to actually open up an account on Coinbase or something and actually owning crypto. But to me, the real way to buy crypto, if you want to buy crypto in the publicly traded markets, the paper markets, is you buy Coinbase, which is doing really badly since it opened up for trading, like 3 weeks ago, is it? And that's right when Bitcoin peaked at like 67 or 68,000, and now it's 38,000. So we'll see. And then lastly, let's just take a quick look at my watch list. If you want to know what I look at every day, this is like a really important dashboard for me. It's just the 11 big exchange traded funds that track the 11 sectors of the economy according to S&P McGraw-Hill. So consumer staples led the way, utilities led the way, healthcare, energy, financials. I'm glad financials at least were up a little bit today. It's such an economically important sector. And what was down, consumer discretionary, technology, communications, that's a big slug of Netflix and Facebook right in that one. It's not just, don't think it's just like AT&T and Verizon. That would make too much sense, right? So XLC, the communications ETF, I think Verizon and AT&T are like 4.5%-5% each of this ETF. They're not, it's a big weighting for an ETF, but small compared to the other bigger stocks in it. So let's move on. I'm going to stop sharing the screen. We covered meme stocks. I have my little list. We went over Dylan's comment. We went over the shout out from Eric Boylum. The job market today was pretty strong. We had the first time unemployment claims below 400,000 since the very beginning of the pandemic. Good news. The ADP private payrolls number was really strong in the 600,000, like the high 600,000s range. And we have the official Labor Department non-farm payroll numbers coming out today. And the estimate is around, 675,000 jobs created. It was a big disappointment last month, but there's a lot of weird stuff going on with the numbers. And, just like we have issues with supply chains for goods, we're having, I think, weird numbers for employment figures as well. And I don't know if all the states really reported complete numbers just because there were holidays, people are out. It's just a weird time. So I think every number is suspect. That's me. So that, do we have anything else to go over? No. Holy cow, we wrapped this up in like 21 minutes. That's the story. Thank you very much for watching. As you know, I don't live stream on Fridays. Instead, I send out what I think is a really cool blast email every Friday. If you'd like to get on my email list and check it out, please do. I never sell your email address to anyone. It's just for my own personal business use here, and that is it. But I put out some pretty cool stuff, and I like to think it's very thoughtful. It's not just the usual, newsletter. Okay. Thank you. And I will see you Monday. Have a very good weekend.